have a 0.1% wallet with like a fuck ton of volume, which could be eligible. So I'll let you know if I retire after the airdrop.
It's very funny that our industry considers generating revenue, i.e. having a functioning business, a meta. I mean, it's quite absurd.
It would be amazing if they have a mechanism that punishes rugging and adds a multiplier effect on if you've built a token and it's still above 1 million market cap and is still flourishing with real users.
If we see any euphoric run-up, these usually don't last for very long, and it does pay off to not have to rush into positions once it gets going, but to be positioned before.
How easy is it right now to get funded as an early stage project when you build a useful product?
It is very critical to evolve in the value accrual and claims to revenue and securitization of these tokens. If we solve that, I think many of the tokens do become interesting again.
All right, we have a few interesting topics today, but the special thing about today is we're doing this in collaboration with Swyke. Hey, Juri.
Hey, nice to see you guys again. How's Berlin these days?
Pretty good, pretty hot, pretty humid, but livable. Probably doesn't compare to Lisbon, though.
Yeah, right now it's very sunny here, but yeah, it's very good to be close to the beach. So yeah, after these episodes, I usually go to the beach, which is like a nice contrast to.
So not locked in right now. Just
not locked in. No, I'm European. So we work very little, then we go to the beach, eat a lot of olive oil, drink wine, and smoke a lot of cigarettes.
Europoor maximalism.
Correct.
Are you gonna lock in for fall and winter though? What's your market outlook?
Yes, I think that's a great introduction into the broader topic of today. Yeah, I mean, except the DeFi summer of 2020, usually it always feels like that in summer, not much is going on. So DeFi summer 2020 was obviously a very crazy thing. And yeah, and then 2021, 2022, also 2023, last year as well, historically, we always were in this environment where nobody really knew what's going to happen next. And when everything slowed down, just that we saw everything increasing and becoming more exciting in September, October, November. Last year, it was also a little bit catalyzed by the elections, right? But this year, there are no elections in the US, obviously. So right now, I think it's only like pure speculation from the broader market that things will just repeat like we have seen it in the other years. But to be very honest, maybe you guys have a better answer to that. I don't see any major catalysts for price increases or more market excitement.
There's no DeFi summer this year. I am
that's for sure.
Moderately high conviction on this. Yeah, I mean, that's great. But maybe I was thinking actually, since we're doing this in collaboration and maybe the audiences of each other don't really know. Juri, can you just give us like a very quick intro and we'll do the same?
100%. Yeah, now that we're already in the trenches, let's make sure we are all on the same page. So I'm Juri. I'm currently the head of product and research at Swyke. We're an institutional, great validator. I was before with friends, co-founded it with a bunch of other cool guys, and we got acquired by the Swyke group. So we joined forces to focus on more ecosystems, because with friends we were like very focused on the Cosmos and the interchain, and now we are very focused on Sui, Solana, and a couple of others. Maybe we can talk about this in a second as well. And also did Cosmos, which was like a conference focused on Cosmos. So my background is very much interchain, Cosmos, app chains, and so on and so forth. But now I'm more and more in the Solana and Sui trenches. And yeah, maybe an introduction also for you guys. You are from, maybe you can give also a quick intro for our audience.
So Cosmoverse is actually where we know each other from. I think I remember the first one, which was still top 2, I would say, together with Medellin. But we met in Lisbon in the first Cosmoverse, and that's when like the whole idea of the validator and everything started. As for myself, I'm Onur. I'm the co-founder of Binary. We've been working on Cosmos SDK for the longest time, and now we're focusing on Celestia, mainly working on Rollkit. And together with Max, who can also say a few words, we've started this Odyssey initiative this year, which is basically utilize and leverage AI as much as possible to produce a bunch of products and the intersection of crypto and AI, but also be very public about it.
Yeah, I'm mainly working on Odyssey and on the non-technical side of binary. My personal background is in the DeFi space, so done a lot of yield farming, but also a bit of directional stuff here and there. And yeah, I beg to differ a little bit on Onur's outlook on the absence of a DeFi summer. I'd agree that yeah, we might not see a lot of hype and a lot of excitement in the summer month until the end of August, but I do think that engaging on chain and just keeping clicking is plus EV again. We've seen it last year in the meme coin sector, and we've seen it in the summer dip of 2021 that the summer months themselves were pretty boring, but they were the critical time to position ourselves for the fall. Because if we see any euphoric run up, these usually don't last for very long, and it does pay off to not have to rush into positions once it gets going, but to be positioned beforehand.
Yeah, I mean that makes a lot of sense. The only question that I really have, just to get like back to this, what are the catalysts that you potentially see for more activity on chain, higher prices? Do we actually have already prices that do not really justify? There was also now this revenue meme going around, especially like in the Celestia ecosystem. I believe we will talk about this in a second as well, where like a lot of contributors started talking about revenue and if this is like justifying the valuation. So currently, if we would match revenue with valuations, there's like a big mismatch. However, what would be like a catalyst to basically just focus on basically the narrative itself and the potential pre-revenue matter that we have seen in the industry and also in traditional internet companies before?
Personally, I don't think that there's a idiosyncratic catalysts. It's more, if you look at general macro, liquidity is increasing again. I do not think that this liquidity will flow directly into alts. We do see a few of these treasury companies starting to buy up not only BTC, but also to buy up ETH, to buy up Sol, to buy up Hyperliquid. And of course, that creates a little bit of an on-chain wealth effect for the existing holders. So if there is sustaining buy pressure on these major alts, they can exit their holdings at higher prices, and that can flow into longer tail altcoins on chain. However, I don't think that we are able to recreate the alt season of 2021 or 2017 just because there's an overproduction of coins, and the meta and the narrative of our industry right now is a much different one than what we have seen 4 years ago and 8 years ago. 8 years ago, it was put XYZ on the blockchain. 4 years ago, it was the rotation game into alt L1s, into these DeFi primitives. You could just buy the DEX on the latest L1 that was popping up, and you were guaranteed a 5 to 10x and mid 9-digit valuation of that token at the peak. I do not think we'll be able to replicate that. However, what I do see in terms of on chain participation is the yield landscape is for sure maturing. We are seeing much more sophisticated and capital efficient products now. We have things like Fluid, we have interest rate derivatives on Pendle, we have tranching mechanisms on Infinify. And from the people who I know well in DeFi, I see a lot of stuff being built there that is making the space much more attractive for semi-institutional investors or high net worth individuals who are primarily interested in yields on the majors or on stablecoins. So I do think that is maturing. And from that, you can reason that some of the tokens that are associated with these protocols are at least not going to do terribly. I'm not saying that they're going to 10x or 100x. I think these times are mainly over unless you're able to spot a new meta really early, but it has become much more difficult than 4 years ago. On the side of these tokens accruing value and the revenue meta, first of all, I think it's very funny that our industry considers generating revenue, i.e., having a functioning business, a meta. I mean, it's quite absurd. And I do think that this is going to get mainstreamed more and more. Revenue is going to be the base case, unless you're one of the very, very few tokens that are able to capture monetary premium. But that, in my opinion, is reserved to BTC, Monero, and to some extent to ETH and Sol. I think later we'll go into the whole modular money discussion around TIA. But as of now, since there is no ecosystem around it, I don't think it has a lot of claim to this monetary value capture. And everything else either has to be a credit or a debt instrument and generate cash flows through that. So that's most of a DeFi yield token side. If you look at stuff like Pendle, if you look at LP positions, or it has to evolve to become a concrete claim on equity. The problem that we have right now is that, yes, tokens or projects associated with tokens generate revenues, but you do not have an inherent or a concrete claim to these revenues. I think Uniswap and the Uni token is a great example. All the revenues generated by Uniswap, and Uniswap is a great business in that sense, go to the Uniswap Foundation or Uniswap Labs. None of that accrues to token holders. And that is something that has to be changed. I don't know if we'll manage to change that in a broad scheme in this year, but the regulatory conditions for that have been set. I mean, the US is now much more regulatory friendly, and I do think we'll see some major innovation in the token standards and legal enforceability space over the coming months. So that could propel a little bit of an on-chain season, in my opinion.
Yeah, you talked a lot about regulation, but you also did a very nice comparison to 2017, 2021. And I remember how in 2020 liquidity was very much accessible for everything that one built. Like in hindsight, I'm still surprised like how many like awful projects got funded in late 2021 when like greed was like at an all-time high because kind of everything just worked. So question for you, Onur, who has been in the trenches for quite some time now, and you also work with a lot of early stage projects, I would say, via Binary. So how easy is it right now to get funded as an early stage project when you build like a useful product? Is it hard? Is it getting more easy compared to last year? So what's the matter there?
It's harder. And I think the base case has always been if you're a very strong team. I mean, let me share my experience in terms of fundraising. So people imagine this process of, like we're gonna have some notion of a product, we're gonna have a pitch deck, and then we're gonna like reach out to 50 people and see if we can find like 1-2 VC leads and close it. But in practice, that's almost never how it works. If you are completely cold without any traction, I would say it's pretty impossible to raise. If you're lucky, you're getting a small grant from the ecosystem, which sustains for a bit. But in practice, one thing that I've seen work well, and that's probably the only way that works right now, is having strong connections, having a strong team, or if you're kind of like a new player, have traction in your product. Week on week growth, show traction, show real users, show some like motion in your product. I think you have to have one or the other, right? So if you're, for example, building a new trading experience on Hyperliquid, you have 10,000 users, that's amazing. I think that's kind of like a great starting point to position yourself for a raise. However, if you are, you just have an idea, you haven't built anything before, I think it's pretty impossible right now. And on the other hand, if you have a great network, you're just starting out, but you basically have been in the space for a while and you know a lot of people, that's also kind of like a good starting point. And the reason I say this is basically I'm seeing fewer and fewer core tech infra plays. I think that is getting more and more saturated, especially since most of the like previous large raises, the eigen layers, the ZK sinks, it's completely unproven whether they will succeed or not. Right now, there's no, if you look at the on-chain data and the usage and adoption, there's no notion, in my opinion, of them winning. So I think VCs are hesitant on those bigger core infra plays. However, we're seeing, and this is also fueled by smaller teams being enabled to ship faster and build greater things with AI, is things like, things like trading terminals or things like trading bots, mobile experiences, just like apps that make sense for the user, that abstract the heavy lifting crypto part, wallet management more and more. I think those, if you have a small, efficient team, I'm seeing a few things that also kind of lands on our table, and that is quite interesting.
Yeah, that's I think this resonates really from what I've seen in the conference space as well. You know, if you see the people walking around who are building stuff, it really covers it up.
And then one more thing I'm seeing is there are teams who, instead of like going through the 2, 3, 6 months fundraising process, they ship a prototype and they just launch a token, kind of in the spirit of internet capital markets, which Max and I had a conversation how sensible that is. I'm more skeptical in the long term. I think that's a burden. Most of these founders don't anticipate or don't know how difficult it will be. However, with the right amount of traction, you can easily generate tens, if not hundreds of thousands in fees within a few weeks. And that's, you're not giving away equity for that. You're basically issuing a token for which at some point you need to find a mechanism such that the value accrues back to the token. But I've seen more and more teams do that, especially like if you aren't able to raise or if you don't want to raise because you don't believe in this old like VC paradigm. I think that's just like one observation that I've seen. And the most prominent example for that, without kind of like acknowledging them or without like endorsing, is Believe app, right? Like on Believe app, the whole Believe app meta was kind of internet capital markets. You have a product, you start your token. I think 2/3 of the fees are shared with you, and then 1/3, roughly speaking, goes to the Believe app team. I've seen a lot of teams launching that, and like just to give you an idea, if you generate $1 million in volume, that's 100K in fees. No, wait, that's wrong. That's 10K in fees. Yeah. So, and launching a project with some traction with $1 million in trading volume for a few days is not crazy. And then like if you can sustain some amount, it will pay the bills. So I'm seeing more and more different approaches. One other approach is you just like charge fees right off the bat, right? And I'm experimenting with like data products. So I have like a few data products in mind that basically charge a few $100 in software as a service style kind of like fees right off the gate. But the data they're providing is really, really valuable. So if you are a trader, for example, trading with like tens of thousands of dollars per day, that's going to be probably worth it. So I would honestly question the VC meta in its entirety, but that's just personal preference.
No, I agree with that. I think the asymmetric upside for VCs is coming to an end because they captured the vast amount of their returns from infra premia, which are collapsing more and more over time. There are some hybrid projects you could put most of the L1s into that sector, which are to some extent infra, to some extent network, to some extent community, to some extent a monetary premium. I mean, Kyle Samani with Solana is probably the most prominent example of someone who captured an insane amount of upside there. But the general, let me invest in bridging infrastructure like Wormhole, like Axelar, Layer Zero, Hyperlane, etc. I mean, these are all important and technically sound projects, but I do think that they will struggle to keep up the valuations that they've received in the last cycle.
Yeah, I couldn't agree more on this, because obviously, like, the question also is, some of them are nice projects, but the real question is if they really need a token, if we're like completely honest. Like, tokens also used to be like a tremendous way to raise USD in order to get it going. But yeah, I think there is like a case to make that we have too many networks that are a blockchain without them needing to be architecturally a blockchain, or that they need a token that you could have just raised as a crypto company, so to say.
100%. And that's why, to some extent, disagree with Onur, because I do not think that a token in the grand scheme of things is a burden. I mean, it can become a burden if you mismanage it, but if you look at it, the amount of work that you have to put into a project and the proof that you have to generate before being able to cash in and raise absurd amounts of money, for example, through a token launch, in crypto is still very low if you compare it to most of the Web2 era and to traditional finance. If you look at defense tech, biotech, I mean, of course, you always have some individual outliers where that gets proven wrong, but I think these outliers prove the general dynamic that in crypto it is, if you're good at marketing, if you're good at distribution, if you're good at storytelling, you can raise a lot of capital very easily. But yeah, agree that, I mean, the existing tokens, because most of them have been mismanaged, most of the products have not been able to follow up on their visions, most of these things will turn into a burden. But the token launch mechanism in of itself, I would say, is pretty neutral on that. It still depends on what the founder delivers or doesn't deliver. On the overproduction of token side of things and these products needing a token, I think there again, it is very critical to evolve in the value accrual and claims to revenue and sort of securitization of these tokens. If we solve that, I think many of the tokens do become interesting again, because that's as if you were able to have a legitimate and a concrete legal claim on critical infrastructure that the future world and the future of finance is likely going to run on. If you look at these bridging infrastructure, if you look at certain ZK projects, if you look at modularity projects like Celestia or Dimension, right now on the revenue side of things, these are extremely uninteresting. There is no case you can make for any monetary value accrual because there is no ecosystem where people would denominate their returns or their portfolios in these assets. And there is no revenues that would justify any token buybacks and kind of just propelling the token up via a positive flywheel. However, if there are people bullish on the underlying technology and we are able to create a framework that gives them a legitimate claim on the equity of that technology, I think that could help tremendously to turn it from a wannabe commodity into an actual hybrid between equity and a future commodity when it's used for gas tokens and gas fees, etc.
I do agree on the revenue side. I think we don't have to care too much about revenue at this point, since everything we're doing is a bet on running the future of finance, where once the toggles are activated, revenue will be figured out and come in. So I'm not too worried about that in the short term. I disagree with a few other things, though. I don't think there's a legal claim at all, and I think if there were to be a legal claim, those things would all be securities and it would be much more complicated. And yes, we do have an administration right now in the States, which is more liberal, but maybe the next one won't be. So I think that is still a big issue. And that in my mind was also the biggest issue with this whole internet capital markets meta, where cool, there's a token attached to a product, but what does it actually mean? Does it give me voting rights? Does it make me eligible for future revenue distribution? It's completely unclear. So in that sense, I think it's a little bit unclear still. What I see generally is it's not an either or. So depending on what you do, if you want to do a new layer one, basically create a new ecosystem, create a new market, create a new environment, you have to have your chain and you have to have your token. There's no other way around it. That's how these things work. You have to be sovereign and you don't want to pay rent anywhere else. However, if you're, for example, a pump fund or Axiom app, you just start in a thriving ecosystem and you introduce your token later on when you can, and eventually become a chain to have the highest level of sovereignty. The problem with that is I've seen more projects failing because of that than succeeding. Most prominently, I think DYDX. There were other issues and Hyperliquid came along, but I think that's a natural progression of have a dApp, have a token, become a chain, become fully sovereign. But it wasn't vastly successful. So I'm also thinking out loud and still asking myself if the chain is the end game. But I do agree with the token just being a means to capture value, mainly. I understand and I agree there's a ton of benefits with regards to governance and sovereignty, but I think the number one reason why teams launch tokens is the economic upside still.
Yeah, may I add to that? So DYDX is a great example, but I also have to say that Hyperliquid really ate DYDX's lunch because Hyperliquid is such a strong product. I may want to add like another thing to this whole matter. And I talked for a very long time about this, actually also on the show with Brian Crane from Chorus One. And he mentioned that this entire meta around this is a token, like all of these token launches are scammers paradise. And this is what I'm actually feared of. Because as an industry, we're now in a position where everyone can just launch a product that is half baked eventually and kind of works. And then you can launch a token around it, raise capital without needing to register yourself via the traditional ways. I mean, on the one hand, it's super liberal and I'm libertarian and I really like the concept itself. But on the other side, from a crypto industry perspective, people get tired and bored about that. And I think this is like something that we need to be careful of, because if we overdo it, then people leave because they say, you know what, I'm done here.
That happens all the time. What's crazy to me, and I'm still making up my mind about this, is if you look at like Jesse from Base, or if you look at like the Jupiter Moonshot team, they encourage content as token, basically. And content is something with a very short life cycle. Like a piece of content, a news article, or a meme may be funny for a day, a week, or a month, or longer, right? And the way they communicate and the way kind of they present their launch pads or products is basically you're encouraged to produce content and launch them as token. And the reason for that is that's how they make money, because they make money out of like the bonding curve, the initiation of those tokens, but also after the migration from trading fees. And that's crazy to me. Like that's something I definitely, again, I don't have a too strong of an opinion, but it just feels wrong. Like that's the part where, okay, cool. There's maybe like 1% interesting projects, but most people will just like launch random things, polish them, make them look funny, and then just rug everything. And I think that leads exactly to the effect you mentioned. That's like you will come in, you will maybe hear stories of people getting rich overnight. You'll do one or two trades, you'll get completely rugged, lose a couple $100 if you're lucky, if not a couple $1,000, and then you'll leave probably forever, or at least like until the next cycle. And that's what I'm seeing right now, and that is kind of like concerning in my opinion as well.
Yeah, and just to add to that, what I'm even more scared of is that the people who used to be good actors in the industry, like solid developers, saying, hey, my product didn't succeed before. Everyone is doing it. Everyone is doing token launches left and right. Let's also do a grift because, I can't make a difference here anyway. And why not do it as well? And then we also see how basically good actors turn into bad actors. I think this is a whole matter where we really need to be a little bit more responsible as an industry and promote more integrity.
That has been around the industry from its inception, though. It has been the case with the vast majority of ICOs in 2017, 2018. Think about EOS. Think about many of these projects that are still trading at a multi-billion market cap and FTV. Think about Cardano. Think about Polkadot. None of these have shipped anything of meaning or developed any meaningful ecosystem in the last 5 years. And yes, they are not outright scams in terms of like rugging people, but I mean, they are getting ascribed valuations that are not reflective of the state of their product and of the state of their ecosystems. I think the increase and decrease of scammy and sketchy behavior is sort of dependent on the overall liquidity and money flows in the industry itself, or at least it's strongly correlated. If we have a lot of retail interest, that is going to awaken the interest of scammers again. Right now, we see retail interest increasing, and it's becoming less and less profitable for scammers to do anything in the industry because the industry native participants, some of them have left. Many of the ones remaining have become very tired of token launches. So while I would 100% recognize that it is a big issue in the industry, it's not something we can completely or inherently eliminate. I don't think that it is worth betraying the values that we have founded the entire crypto sector on for like a marginal decrease in sketchy behavior. I think it's an unfortunate part of the game, but I do not see a way how we can remove it without destroying the game as a whole.
Yeah, I think I really, when I thought about this and talked to Brian about this, I always thought about Churchill's quote about democracy. Democracy is the worst way to run a state, but I don't have a better idea or an alternative to it. And also Brian mentioned on the show that he has no idea how to basically fix this issue. Because obviously if you say, okay, we censor token launches and we are like an ultra censorship environment, which is obviously a huge contrast to what crypto has been about so far. So yeah, also agree on that.
Yeah, no, I don't think that there's any merit in trying to censor it. At the end of the day, if we achieve some progress in the value accrual mechanisms of tokens, in the securitization of tokens, data and information is going to become more accessible and abundant with AI. I mean, on the other side, you can argue that, of course, creating a fake narrative and creating fake data, etc., is also going to become easier because you can bot everything, you can automate everything. It's always going to be in a cat and mouse game, just as with encryption and people trying to break encryption with quantum computers and all of that stuff. I don't think we'll ever be able to get rid of it, but with the sort of streamlining and increase in efficiency of capital flows, I do think that the return prospects of doing sketchy stuff in the industry is decreasing over time. Maybe to pivot a little bit, because we previously talked a bit about the overproduction of infra, overproduction of block space. I know that both of you, Onur and Juri, are quite involved and quite close with the Celestia ecosystem. What do you think about the ecosystem there, the TIA token revival, and do you think that the CLOBs on blobs thesis has any validity to it?
I think in crypto, one thing that I've seen over and over again is price action does not represent what's happening behind the scenes. It always represents what happens external, what happens with traders, what happens with maybe like large institutionals dumping. And I think in Celestia's case, if I were to summarize, I would put it very simply. Looking into the teams and what they're building and behind the scenes, it's amazing technology that is being built. I think it's also novel technology that's being built that doesn't exist today. I don't even need to dive into the specifics of CLOBs or blobs. That obviously is kind of like, if you dive a little bit deeper, that's I think the most interesting use case. However, if you even just look at it from like a very high level, the biggest mistake was allowing locked tokens to be vested. That led to large institutions, I don't want to name names, but everyone knows who they are, to dump millions of tokens, like hundreds of millions of dollars in tokens. I'm very high, like I have very high conviction that if that weren't the case, Celestia would be trading at a 10 to 50x higher valuation right now. I think that was the biggest mistake. If something keeps going down forever, it kind of creates this like negative loop and very bad sentiment, and people get more and more bearish and the community gets bearish. The last thing I would add here is, I'm, like I said, like looking at it from a trenches perspective. I look at like more grassroots movement that happen along the ecosystem, and I think like the whole mammoth ecosystem as well as like the sloth ecosystem are two kind of like very interesting anchors of hope in my mind. Like from those communities, I think there will be great projects that will come up, combined with seeing what happens behind the scenes and what projects they're pushing. I'm overall bullish. And then the last thing I want to say is, if a token price went down minus 90, okay, so of course it can still go down another 90%. We've all seen that in crypto. It's a fallacy to think just because it went down 90%, it cannot go another 90%. That can happen. But I would say, if you have conviction into a project and the fundamentals didn't change, which is like you believe in data availability, you believe in rollups, and you believe in the team building that, if that didn't change, then I think it's like a generational buying opportunity here, especially right now in the market where people expect the last leg of the bull market. We've been in the bull market for 1-2 years already. And I think like if you believe in Celestia, it's probably one of the best opportunities to buy. Obviously, no financial advice. But I do also think that with macro changing, it's going to affect everything: Bitcoin, Ethereum, Solana, including TIA.
I will add to that, and it really reflects what also Onur was saying before. I think that Celestia is potentially in the best position it has ever been for a couple of reasons. One, everyone is saying, okay, Celestia TIA went down in price so much. Let's be honest, we are still sitting at a market cap of 1.14 billion and a fully diluted valuation of almost 2 billion. So it went down in price, but it's not at 50 million or 100 million. It's like way north of that.
But we have more tokens, right? I think especially with inflating chains, if you just look at the market cap, it could be the same market cap and the price is 80% down just because the supply grew 80%, which is not the case here. But that's why I think the proposal of cutting inflation is basically interesting, although permissionless supporters say, hey, like that centralizes the chain, which is true. But I think like cutting inflation and removing this like downward spiral of validators, institutions, and everyone selling, then you can look at the market cap and make better judgments, because then there's not like a crazy inflation going on, which maybe even increases the market cap while the price is going down.
I slightly tend to disagree on that, actually. So first off, I think the other reason why Celestia is in such a great opportunity, because I think it's the only serious competitor right now for the app-chain thesis or what we have imagined. I think Cosmos's vision is more or less dead, like the interchain or the Cosmos. There's like a huge gap now in the market, and Celestia is in a position to step in. I think that Celestia is by default the best DAA product because they were focusing on it for years and years and years before all of the other competitors that came out of the blue in early 2024 tried to copycat it a little bit. So I think Celestia is the best product here. So if you really think, okay, the app-chain thesis will survive in what way whatsoever, I think Celestia is still in the best position. The one thing that annoys me a little bit about this inflation meta right now is Celestia is in such a great position, as mentioned. Let's focus on the real deal, is how to make this ecosystem sexy and not repeat the mistakes that we have seen in the Cosmos ecosystem by focusing on a lot of academia, by focusing on inflation, on tokenomics, and all of these things, rather than getting this ecosystem to life. I think what Celestia needs to do now is to have like a couple of POCs that people realize how awesome this technology is. Like to kind of have a similar effect that we had when Osmosis launched and everyone all of a sudden saw what IBC was capable of. IBC got launched in January 2021, but until August or July of 2021, nobody really knew what IBC was, what it was capable of. And I think if we revive this ecosystem like that and focus on building such things and don't risk a cosmosification of Celestia, I think the energy is much better invested there than, throwing some inflation Fugazi numbers around and philosophizing, okay, what happens if we do this and what happens if we do that? Can we get prices up or down? I think the only way for Celestia to really capitalize on this opportunity right now is shipping great POCs, getting more people on chain, and then we can still look after inflation if that's still an issue.
2 comments on that. I think the first one is that we vastly overestimate the actual importance of many of these things that we care about in the crypto industry ourselves. Like the whole modular versus monolithic debate, to treat that as an end in of itself, I think is overrated. Nobody, on the user side, nobody cares what this thing is being run on, what infrastructure is being used. I don't care if some company I'm buying products from is using Apple OS or Windows as their system to run their IT on. I do not care the slightest. I don't care if Mercedes is painting my car with a color made out of ingredients XY or AZ, as long as the paint is durable, as long as it works, the customer does not care. So I think it goes in a similar direction as with decentralization. The amount of people who care about decentralization for the sake of decentralization is very limited. It's the people who already are in the industry and have been in the industry for the last 8 or the last 4 years. And as long as no single government is able to shut down any chain or any application, we can assume it to be decentralized enough for decentralization to attract users as a value proposition. Anything beyond that is a crypto industry internal circle jerk. And I don't think it's valuable, wasting a lot of time, a lot of resources, and a lot of throughput capability on that. Similarly, the whole app chain thesis. At the end of the day, nobody cares about it. For the app chain thesis to succeed, you need to have a lot of progress in the chain abstraction and just cross-chain infrastructure getting automated and getting abstracted away. Me as a user, like, I don't care if Hyperliquid is running on its own chain, if it's a rollup on Celestia, if it's an L2 of Ethereum, if it's an application on Ethereum, as long as I get my transaction through very quickly and smoothly, and the bridging experience to get funds onto this application is not a huge pain in the ass. I think IBC, I mean, all three of us sort of coming from that ecosystem, I think we all would agree that the IBC user experience and the chain, like interchain experience of 2022 with the launch of Osmosis and similar applications, compared to the bridging experience in the EVM ecosystem and in the SVM ecosystem, was much better. What we, however, underestimated is that there were no interesting assets for people to trade, except for the whole Terra Luna ecosystem, but that collapsed in May 2022. So after that, there's nothing interesting to do there. It doesn't matter if the application is good, if the chain infrastructure is good, if the user interface is good. If there's no interesting asset to be traded on Osmosis or to be split into yield tokens on Prism, these applications will not gain any traction because nobody cares about the assets anymore that are available on this. So that's a huge vector. So if we want to see the modular ecosystem, the app chain ecosystem, Celestia succeed, it's much more a distribution question than a product question. They need to distribute to folks in a way that these applications are easy to access. You can't be forced to spin up an extra wallet to use Celestia. You have to be able to do it through your Phantom wallet. You have to be able to do it through your Rabi wallet. Then there have to be interesting assets to trade with a decent liquidity. If there's like a CLOB DEX or a perp DEX to be launched on Celestia, they need to focus on offering the big assets which attract a lot of liquidity, which attract a lot of users, which have a big community, namely BTC, namely ETH, Sol, Hyperliquid, a bunch of meme coins, because that's what people are still not in the to the same extent as last year, but are still pretty cultish about. If there's some long tail Cosmos ecosystem asset on there, nobody will care. Like, this thing is going to have a trading volume of a couple of K a year or a day. I mean, frankly, nobody bothers. And so for this ecosystem to succeed, you need to be hyper aware of the trends that the actual user and the marginal user who is yet to become crypto native is looking at right now. Stuff like tokenization of equities needs to be considered on these dexes. Stuff like fintech integrations. I mean, right now we're even seeing chains paying fintechs to use their tech. Arbitrum is paying Robinhood to start offering some of their infrastructure or building some of their tech on top of Arbitrum before, after some time, moving to their own chain. And if Celestia doesn't want to pay with token incentives, which I think in the mid to long term is the correct decision, because otherwise you're giving out tokens to people who do not really deserve them, who do not really want them, who do not really value them. Then on the other hand, you have to make the tech experience, the building experience, disproportionately easier and disproportionately more attractive than building on any other chain to attract builders. It's not a product problem, it's a distribution problem. 100% of the case.
So
Yeah.
I do agree with most things. I think the app chain thesis failed to a large extent. I think what users care about are a couple things. I do think, and this is the main thing I disagree, I do think they care about like experience, whether it's like UI or mobile app or how they interact with it. And I do think they care about price. Like if the chain they're going to has a down only price, which affects the entire ecosystem, I think it's bad. And kind of like having to sustain a validator set and pay for security implies that there's going to be like sell pressure on that ecosystem, which if it isn't matched with buy pressure, it's going to lead to a price reduction. So in that sense, I think app chain thesis is also bad for that. If you go with a roll-up design, for example, you don't have that. It's much better potentially for the ecosystem and for the token price. And I think the experience is also important. Like I don't want to deal with like waiting 17 minutes for some random bridge just because the design of the ecosystem doesn't allow for, you name it, fast finality or whatever, which leads to me having to wait for minutes. I think, the experience the user wants is basically abstracted as much as possible. If not, at the minimum, it needs to be press one button, sign one transaction, wait for a few seconds, and then, you can use the app with the software you're familiar with on the other side. And I think that's also what like Osmosis is trying to do with Polaris, which is why I'm like very bullish on Polaris in general and as a product. Not so bullish on Osmosis chain, even though there is a connection and it powers a few things behind the scenes.
Yeah, like I think I can resonate a lot with a couple of things that were mentioned here, and just to touch base on this, like I really do agree with you, Max said. The user doesn't care how it works, but at the end of the day, I believe that roll-up technology is, for the reasons that Onur just mentioned, the better technology than having an ecosystem of hundreds of thousands of blockchains that all rely on their own validator set. And from that perspective, Celestia is a super powerful piece of infrastructure, just because there is still the demand to have app chain style applications, I would say. Like also Robinhood basically wants to do its own thing further down the road. So Celestia offers you to open up your rollup, to launch your rollup in the way you desire it. And I think designing freedom also could lead to a better product, even though I also still agree with you. Yeah, you need to have an interesting product at the end of the day. You need to have a product that is interesting enough for people to use it, but it also needs to have a good user experience. And this is only the case if the engine under the hood is also working properly and intended.
Yeah, I think we should have a Celestia debate very soon with a couple of people with interesting viewpoints, because I fully agree with you that right now, if you look at the decrease in price and Celestia having become a very hated token in the crypto Twitter circles, I do think it's at an interesting spot here. And if the technology of rollups and kind of this modular thesis plays out, I think Celestia and the TIA token is the most concrete bet you can make on this entire sector. Whereas in the general L1 and L2 space and like chain as the underlying infrastructure space, you have an abundance of tokens, and the cumulative market cap and FDVs of these are orders of magnitude higher than for TIA. So yeah, I'd be pretty excited to have that debate.
May I just add one thing? What I really hope that Celestia gets, or like doubling down on it. So we have seen it with the mammoths now, but Celestia really needs to double down on a cult, like something that people identified with immediately. We had like, I'm just it's funny because I just wanted to say Solana, and I saw my cycling glasses here. That's like what Solana is about, the fast competitor to Ethereum, a common enemy. Ethereum are the bad guys. We are the modern guys. We're the Apple of crypto kind of a thing. Then you have the Bitcoiners, the ultra libertarians. You have the meme coin people who say, we don't like the VC coins, launch whatever. So you need like a kind of a cult, and I think right now, and I think this is what really Celestia has to work on, is to work on a cult that people can grab, because this blob and globs and whatever, it just takes way too long to explain this to folks. And I think like with mammoths or with slots, that could be like maybe an interesting solution to solve this issue.
I think
fully
so.
agree that Celestia needs a cult, but I deeply wish that it's not going to be around some NFTs. I mean, come on, we are 30-year-old males centering our personalities around cartoon animals like this.
Yeah, whatever it is, but it needs to be something. Whatever it is, but it needs to be something.
I agree, it needs to be something, but I hope it's not going to be a return to the like cartoon animal meta of 2022.
I think it doesn't matter what it is, but like a couple comments there. So the problem I have is like the term cult now is way overused and it's completely diluted. I think mainly Murad popularized it. That's why now if you engineer it, it's not going to work. I think, I met Mustafa at a conference. I think it was Modular Summit. I don't know if the last one or the one before. And I told him like, hey, you need to be the cult leader for this thing to work with the history of like lulsec and everything. And he laughed, but he's like, yeah, okay, like how do we do that? So we joked about this. I think now, honestly, just saying that it doesn't mean anything. It's overused. But you hinted at what it means, which is basically you have grassroots communities such as mammoths or sloths, and I really am very bullish on those. And it doesn't matter whether they start off as NFTs. We've seen that with Pengu, we've seen that with like other ecosystems, Milady or whatever. And I think that doesn't matter at all. Actually, it's more about like bringing people together along some shared narrative, along some shared topic, and then like trying to grow that ecosystem together. The only problem there is if you keep doing that and you don't have leverage and there's like a large institution that dumps hundreds of millions on your head, that's going to be demotivating as fuck, and that's going to drain the energy out of these communities. That's why I personally think the inflation stuff is very, very important, because this is at the end the mechanism that makes the price. And price is always in crypto the number one denominating factor that builds and breaks community and that determines success or failure. Even if people don't want to hear it, it always comes back down to price. And it's not as simple as, oh, let's do great things and price will follow. No, that's not how it works. Usually it's like, hey, let's make the price go up and great things will happen. So that's why I think it's very, very interconnected.
I think my last comment on the Lulu path to recovery for TIA would be to introduce a proper token securitization framework, spin up one of these treasury corps, just buy up a bunch of TIA, do a hostile takeover as we've seen it in TradFi, and then just like capitalize on the actual technology and create a number go up narrative again. And that will revive the community spirits too.
Inshallah.
But one problem there is timing. And I think you can try everything, but you cannot fight macro. And if the assumption that we have a few more months bull market and maybe like one or two more legs or parabola, however you call it, I think timing is going to be a bitch, basically, because you have to do it now as soon as possible and try to build a floor that you can hold. Bitcoin is already up like 5-6x from the bear market lows. So like it's going to go down again in the bear market, and it's going to like drag everything down, especially like these altcoins. And you have to time it, because like if you position these releases or these initiatives in the beginning or middle of the bear market, they're going to have zero impact. I think like you cannot fight macro when it comes to price. And again, like price will make or break everything. And that's why that's my biggest concern, that it may be too late, but I'm still hopeful.
I mean, maybe the macro wouldn't be bottom ticked right now, of course. I mean, we're rather in the later stages of the macro bull cycle rather than the earlier ones. We are still in a macro bull cycle, though. Everything is pointing towards monetary expansion. It will eventually, the chickens will come home to roost, and we'll have to retrace. And of course, the current macro landscape is not justified by valuations, it's justified by flows, simply because people do not have any other asset classes or verticals that are worth deploying capital into, so they flock into stocks. It is not because these companies that are the underlyings of these stocks produce anything incredibly more valuable or innovative than they have done before. It is simply a flows game. But on the other hand, if you look at trying to revive these crypto altcoin ecosystems, I mean, right now is still a pretty attractive place to do that because they've been down only, even though Bitcoin has been up only for the last 3 years. The BTC alt charts are at all-time lows. ETH BTC is down where it was, I think, in 2020 before the ETH bull run started. Bitcoin dominance is reaching new highs again. If you have a strong conviction that this technology is going to work and this altcoin has something of value to it, I guess now is the time to deploy the capital there. However, I mean, of course, it does come with a big risk, but like if you have a thesis, do it now.
I also think that the good thing with Celestia is that they should have, I mean, I don't have that amount of insights, but in my mind, like they should have enough runway to work through at least another entire bear market if the cycle dynamic 4 years were to continue. Like I have like two scenarios in mind, right? So assuming we're going to hit a bear market at the current prices, I think, you know, whatever the baseline is, TIA will go down another 90%, which would put TIA at like 16 to 20 cents, which sounds crazy, but I think that could happen. But assuming like we're gonna have another leg, which maybe brings TIA back to $10-15, it's gonna end up in the bear market at like $1.50, which is basically the price we have right now. That's why I think the cycle dynamic and timing is important, because I think those things you have very little impact on. This is just like the macro dynamic that happens through bear and bull. And it will be very important and a huge difference. And I'm not even saying like one is better than the other. I think like the potentially like lower price opportunity could create like a Solana effect where Solana dumped to $3, $8 or whatever, and the believers bought it up and kept building. So I think that could also be like a catalyst. My main question I have, so I'm very bullish Celestia, by the way. Don't want to sound too negative. The only question I have is like, are they going to succeed this year, or will it take another few years until everything fully materializes and what they're building comes to full fruition and we're going to see the effects? And I tend to believe the latter. I think like it needs more time, but that doesn't make me bearish at all, actually.
I mean, they can vastly decrease the time required to success if they focus more on ecosystem growth and BD. It's not a matter of infrastructure. There's enough block space there that can be filled, that can be purchased on Celestia. It's a matter of finding projects that are wanting to use the blob, the roll kit, the roll up infrastructure there. If you find these projects and these projects being users, Celestia can be very successful in 6 to 12 months.
6 to 12 months.
It's not going to be
exactly
even in 3 to 5 years.
So I would bet money that in 6 to 12 months, between 6 and 12 months, we're going to be in the bear market.
Yeah, I mean, we've also been in the bear market in March and April 2022, but that was the time when, in terms of DeFi TVL and DeFi users, especially if you look at the Terra Luna ecosystem, it had the most users ever. I mean, there's always going to be a lag, and I don't think we should be not using the chance to acquire new projects and new users just because we think the macro conditions are going to shift in 6 to 12 months. I mean,
no, but I think my
farmers
point is not
don't
that.
stop producing food just because they think macro is going to look worse in 6 to 12 months. If we have a conviction that what is being built is of value to users and to projects, we should push it. We should not make it dependent on macro flows. Because if we say, okay, we're going to make it dependent on macro flows, that is only going to make it even more difficult. Because if we say, okay, let's not even capitalize on the short to midterm expectation of euphoria and of hype and of retail influx that we'll see in the cycle, but let's wait for the bear market. In the bear market, it's 10x more difficult to acquire even one singular user. Like,
but every single user you acquire in the bear market is worth 10x more. So I would say I completely disagree with the last part. I think you have to be extremely tactical about the timing, and that's been exactly my experience. Like the projects that somewhat succeeded I think they got the timing more right than others. And I think, like, again, like, it doesn't mean that doing or shipping something in the bear market is a bad thing. On the contrary, I think it can be a very good thing, because bear market users are very different users than bull market users. Bull market users, there's much more dilution, there's much more tourists than bear market users. So anyways, I hear you though, and I agree on the point that just because cycles turn out to be cycles, you should stop anything. That's not what I'm saying. What I'm saying is just like, I do think there's a lot of like implications of being tactical of when you do things. And I just wish some of the like ecosystem BD initiatives supporting teams would have happened earlier. And I think that the window is closing in the sense that it doesn't make sense to launch the pump.fun of Celestia next year. I think that's going to be depth of the bear market. So I think if we were to land there, I would do more grassroots community building, strengthen kind of the bottom foundation of the user base, and then probably like in 2.5 years from now, launch the big plays that could lead to the uptick. And by the way, my take is that Celestia actually initiated this bull market. Like, the TIA airdrop, in my mind, was the catalyst for this bull market. So I'm very curious, and maybe this is the transition, what's going to happen in 4 days with the Fun ICO. Which I don't know if you guys know. Yeah. So
tricky one in my opinion, because I mean, the bull market was still started by the Cointelegraph intern who sent out the fake Bitcoin ETF announcement, which made a lot of large market players reconsider their positioning. The TIA airdrop certainly did a lot in terms of kind of reawakening excitement for alts. But if you consider the amount of recipients of the TIA airdrop and the amount they received, it was not such a huge wealth effect than it was, for example, with Hyperliquid. However, what TIA managed to initiate with this airdrop was the excitement around the whole modular thesis. And TIA was the singular project that managed to kind of make infrastructure sexy again. And of course, that has completely died down ever since the price decline in the early stages of 2024. On the other comment you made before, I mean, of course, it wouldn't make sense at all for TIA to redeploy some successful application like pump.fun of another chain just in their chain ecosystem. If they were to do that in the depth of a bear market, 100% agree, not worthwhile doing, doesn't yield to any asymmetric upside. But if you look at anything that has been successful over the last 2 years, all of this has been shipped a lot and shipped very hard during the bear market. Pendle has been shipped during the bear market, and it didn't gain traction until the whole restaking hype with Eigenlayer, EtherFi, and all of these RT tokens. When that started, their TVL grew from a couple of dozen millions to 4 to 5 billion. And that was an insane success story. Polymarket has existed and has had shipped most of its features pre the election hype, and it only gained traction through the election. Hyperliquid, in its functionality, has been around since late 2023 throughout the entirety of 2024. The huge success story had not been written until the token launch in Q4 24. So, like, I agree that you have to be conscious of timing, crypto cycles, macro cycles, user trends when looking at BD strategies. But if we look at every single example of a sustainably successful product in the crypto industry of the past 2 years, the ballpark of the shipping has been done throughout the bear market. So I think, yeah, if Celestia wants to succeed, they should act now.
Like, the earlier the better, I would say. But now that we also talked about well-working products, pump.fun, as Onur mentioned, just looked it up actually, the pump.fun during its ICO. I think the target token valuation is 4 billion, right? So I think, to be very honest, to answer your question, I think we will see pump.fun skyrocketing in the beginning. I think they have the meta completely on their side, and I wouldn't be surprised seeing pump.fun around $10 billion relatively quickly. And then it really matters how pump.fun evolves from here. If they become like a more serious player, if they stick to the meme coin meta entirely, and yeah, how the next couple of months go, and what features get shipped or don't get shipped. So, but I can very much imagine that it goes up.
I have
Oh, you have
alpha
alpha. That's always good.
on tokenomics. I can't verify the source. It's in one of my trench groups, so it could be a complete hoax. But what I'm seeing in front of me is, so 25% of the supply is going to be public and VCs fully unlocked. 10% is going to be airdrop, which is going to be vested. 10% of 4 billion is 400 million. A 400 million airdrop is going to be insane. So if these like Dune dashboards volume analyses are right, I have a 0.1% wallet with like a fuck ton of volume, which could be eligible. So I'll let you know if I retire after the airdrop now. Just kidding. Then there's like 13% for investors with 1 year cliff. There's 30% for a team, and there's a Binance fee with a 1 year cliff. 20% is going to be for the community. I assume this is going to be like token creators and streamers and stuff like that, like the Pump Fund community, and 5% market makers, apparently. Again, I hope this is not complete bullshit. The numbers kind of like roughly make sense, I would say. I think it will all come down to like how much is cliff and vested versus fully unlocked, how much is the airdrop, and do they have a mechanism that doesn't reward scammers, right? Because like, what if someone launched 5,000 tokens? Are they the hardcore community member that generated a ton of fees, or are they kind of like punished for rugging? I think it would be amazing if they have a mechanism that punishes rugging and kind of like adds a multiplier effect on if you've built a token and it's still like, I don't know, above 1 million market cap and like is still flourishing with real users. That would be awesome. I don't know if that's going to happen.
I mean, it would be a cool showdown opportunity for all the Sybil hunters out there to filter fair allocations for the pump TGE and airdrop. I mean, personally, I'm not overly opinionated on it. I mean, I have some meme exposure, have not been engaging on pump.fun natively a lot, so I do not expect a lot or even anything from an airdrop. I think on the side of the valuation, I'm somewhat split because on the one hand, it is arguably one of the two most successful crypto products of this cycle, along with Hyperliquid, or of the last 6 to 12 months. There's no doubt about it. They have generated a huge amount of revenue, have gained a huge amount of traction and attention. So it should deserve some value in that sense. On the other hand, their valuation is very dependent on meme coins as a whole and kind of the willingness of people to participate in these games, which in some over the last 6 months have been negative EV because there has been no new capital inflow and no new user inflow, and accounting for fees for trading, for token launching, net capital in this space has decreased. And if all the meme coin trenching participants decide to ape into the pump.fun token, well, what are they able to sell for that? Their meme coin holdings. So that could create a similar liquidity draining event as the Trump meme coin launch.
It already happened. That's the main difference.
Yeah,
the main difference is like meme coins literally bled already 30 to 50% in anticipation of the Pump Fun and World Liberty launch. So I would say the curve is going to be a little more eased just because this time they see it coming. In the Trump case, no one saw it coming. So it was like an insta-dump effect.
I mean, it's
not fully priced in. It's not fully priced in, but
what I wanted to get to with that is that if we see people dumping memes, like a decline in the ecosystem tokens of pump.fun makes pump.fun in of itself less attractive. So like you have to attract a buyer base of people who are not in with the rest of their portfolio only exposed to memes for memes and pump.fun both to succeed. And I think it's a necessary condition that memes succeed or continue to succeed price action wise for pump.fun to go to higher valuations. Other than that, I think it's a relevant event, but like I wouldn't want to break my mind over it. All right. Any last outlooks for the next weeks?
Good question. I think weeks, let's say the next 2 to 4, nothing much will happen in my view. I think I can imagine that people turn excited around September, October. But to be very honest, full disclosure, just a gut feeling.
How about you, Onur?
Sorry, Yuri, just make sure. You say October, November is going to be what?
I said in the next 4 weeks or something, nothing much will happen. And then in the fall, we start seeing prices rise again, more excitement. But it's not based on numbers or something, just a gut feeling. Like looking at the sentiment.
So my initial take was July is gonna rip and August are gonna rip, which right now doesn't look like it. So it could be invalidated. I would like to wait. So I think there's two scenarios. Either the pump Fun ICO is gonna flush so much capital in the market that, why do I say flush capital in the market? It's just because like external capital is going to want to buy it, and then like people are going to make money from the airdrop that's going to flow back into meme coins, blah blah blah. And that could be both ways. Like it could be a black swan liquidity drain, a black hole. If it becomes a liquidity black hole, I agree with you, Yuri. I think then in that case we're going to have rough 2-3 months until things slowly recover, and end of Q3, Q4, maybe even this year. If not, I see a small percentage of the party being over. And then the other scenario, which I obviously hope that happens, is it's actually the catalyst everyone has been waiting for. And it creates the mania in July, August, which was my initial thesis a few weeks ago, Max, if you remember. And then we're going to like have a party for 2-3 months where everything goes crazy until we're going to see things retracing again, and then we're slowly going to transition into a bear market. I somehow don't think the bear market transition will be like in 2017, 2018, where we had this like minus 50% candle in one day. I think this time, just because like we have institutionals on the BTC ETH side, and we have much more capital also on even like good meme coins, I feel like the bear market transition will be long and draining, which scares me because I think like you will not know we're in a bear market until it's too late. So long story short, two scenarios. Either pump fun is going to lead to the euphoria people have been waiting for. We're going to have like 2-3 months euphoria, and then things are going to go down. Or it's going to be liquidity black hole. We're going to have like 2-3 rough months until we see like maybe like another action in Q4, which is more like what Yuri said.
I mean, right now is a good time to position if you're active in the on-chain spaces. Price wise, probably late summer, so maybe starting in August or early September, we'll see some initial upwards movement. I'm reasonably bullish for the remainder of this year. I am not strongly opinionated about when we will peak time-wise. I think it's much more prudent to decide that based on like multiples of prices on euphoria and on social metrics rather than having a fixed time goal. Personally, I am of the opinion that the cycles are not completely going away this time, but obviously the cycle is not repeating what it did last time. So we do have to adapt to the changing circumstances, but yeah, it's still plus EV to keep on clicking. I still think that there's reasonable asymmetric upside in crypto as an industry as a whole. It's not the same that it was last cycle, so I don't think we should go in here with the blind expectation of 20xing our portfolios. But again, I still think that it's an exciting space. There's innovation going on. It is draining, but if you like the game, and you do have to like the game to sustain it, it's still plus EV to participate. So yeah, keep on bidding.
Believe in something.
True that. Was great chatting. I think we should 100% repeat this type of roundtable format. I think we all come to the industry with a little bit of different perspectives, a little bit of different individual preferences and user behavior. So I think we can get a good reflection of the state of the markets here. Was great chatting, guys.
Yeah, thank you so much for coming on, and thank you so much for inviting me. I mean, it was like kind of a joint show. So yeah, we should do this more often. Thank you so much, guys.
Appreciate it. Ciao, ciao.
Ciao, ciao.